Hey friends, it is Sean here giving your real estate market update for the month of March in the year of 2025. Can you believe it's already March of 2025? Spring is right around the corner, and St. Patrick's Day is right around the corner. My favorite missionary, St. Patrick. Yeah, absolutely. Fun fact that you didn't know about me. So let's talk about the market, the local market, the statistics, but I also want to share my perspective on the future economic slowdown that you hear a lot about in the news right now. So, how do we think through that as we're seeing a lot of the news talking about potential coming recession? First, let's talk about the real estate market. So let's look at our comparison month over month. So this month, March 2025, we have 1,217 homes on the market. Compare that to last month, we have about 6.5% more homes on the market right now than we did last month. And y'all, that's primarily due to seasonality. So you're going to start seeing every month a little more homes come on the market each month coming here into the spring. So this is normal. Now, one thing that is very encouraging is this next stat, and that's how many are under contract. We have 1,102 homes under contract right now, and that is a 12% increase from this time last month. So when you look at this and say, hey, we have 6.5% more homes on the market, but 12.3 more under contract, that shows you there's still a high buyer demand. The buyers are out. The buyers are already out in the spring market looking. I can tell you from my perspective that we've seen a lot of multiple offers. So there are more buyers in the market than there are homes that are priced right. That's the key. If their homes are not priced right, they ain't selling. But if they're priced right, they are selling because there's still a high buyer demand. Sold in the last 30 days, pretty much even. Okay, 2 houses sold less this month than the previous month. No concerns there. Months of inventory. Now, this is going to be a number we're going to have to keep watching. We are at 1.9 months of inventory right now. And if you were watching my market updates, we hit down to 1.1, 1.2. So we're at 1.9, still a very strong seller's market. Technically, 5 to 6 months of inventory is a neutral market. So we have a long way to go for inventory to actually be high. But we are most likely going to start seeing the trends that inventory is going to continue to increase. And so, of course, we see almost a 7% increase just this last month. Days on market. This is encouraging. You'll see days on market, and then you see median days on market. This month, our average days on market is 53, median is 19. I want us to focus on the median. The reason why I don't really want us to focus on the average days on the market right now is because a lot of people are really pricing their houses too high still. And so those are just sitting, racking up days on market. But the median really shows us a bit more of what to expect. If it's priced right, if the home shows right, then you should be seeing this 19 days on the market. And that's a big decrease from the month before where it was 28 days. So if you have been hearing that the market has been moving faster, is because it has literally almost 10 days faster just in a 30-day time period. So with homes selling 10% faster, we can just expect that there's going to be multiple offers, and that is what we are seeing. Average amount of showings is 4.41. So actually, you're going to see a little bit more showings on each listing right now, and that's just because more buyers in the market. That's all. Okay, that's all. List to close price. We are back to 100.1%. Last month, it hit 99.2. But this month, we're back at homes are selling on average 0.1% over the list price. That's because there's more buyers out, there's more multiple offers. That means the average close price is actually over the listing price. So if you're a buyer, don't come in expecting that you can just try to offer something crazy low. And if you're a seller, don't try to overprice your house, okay? Because it's not going to sell if you overprice it. It's not going to sell. Well, it shouldn't sell. Maybe you get some kind of lucky charm. And then our average sales price in the area, another key factor to look at. Last month it was 615,000 was our average sales price. This month is 565,000. And what does that mean? That primarily means that the average homes that are selling, price points are lowering. And that's where more affordability is. So the most homes that are selling are going to be closer to the average price point. So if you're selling somewhere in the range of 450 to 550, you're going to have a lot of movement in that price point. Once you're over that, there's still good movement, but it is keeping that average price point a little bit lower because a lot of the inventory is some of the lower price point homes, which gives opportunity, y'all. If you do have a higher price point home, this could be a good opportunity for you because there's not as much of that inventory on the market. All right, so let's talk a little bit about the real estate economy. As a reminder, there's 6 numbers that are important when you are looking at the real estate economy. One is going to be home prices. It's going to be home sales. It's going to be inventory. It's going to be market volume. It's going to be mortgage rates, and then affordability. So what do we see trend-wise? Well, the reality is rates. Let's talk about rates for a moment. Interest rates have actually lowered every week for 7 weeks in a row. So right now we are at what we were at in October of 2024. So that's good, right? That's good news. Actually, refinances are on the high right now because people are able to get something about 1% lower than what they bought at. But the average right now is 6.7. Okay, that's just national average of conventional loans. That's about a third percent down from this time last month. So this is a good thing. It's bringing buyers out. They're getting a little bit better interest rates. And I don't suspect that changing dramatically. I think it is going to go down maybe a little bit more, but the economy is not as volatile right now. And so they're able to bring the rates down. So it's a good time to jump in because they're not skyrocketed high. But what about the recession? What about what you hear on the news? What about what you hear about economic slowdown? Well, if the interest rates are going to be kind of staying in a little better position, that's one, because there's buyer demand and they're trying to help with affordability. But remember, the stats that help with the economy are going to be sales and inventory as well. So what did we see from our stats? We saw the availability is up 6%. We saw that months of inventory is up 1.9, and we see that the average sale price is maneuvering down. So what does that tell us? Well, most likely that does tell us we're on the trajectory that we are going to see a price correction in the market. All right, but that's not new news. Okay, the reality is we're about 9% over the trend line right now. If we were to be on a healthy range, our home prices would be at about a 4% appreciation trend line. Right now, they're at 9%. So we're 5% higher than, in a sense, where we should be on the trend line. And all that means is we're going to see a correction. My guesstimate is we're going to see it probably within 18 months. So are the prices going to go down right now? No, too much demand, not enough inventory. Though I think if if more jobs are coming in available and we start seeing more inventory hit the market, as we are actually starting to see in DC, then we could start seeing in a year and a half prices starting to slowly come down and really to do a reset. And the real estate market often needs a reset. So what does that mean to you? If you're looking to sell, absolutely, I would encourage you, do it soon. Do it this year. There's no reason to wait if your goal is to maximize profit. If you're looking to buy, just get in the market. Okay, you can't time the market at all. And the reality is if you're planning to stay in your house 5 to 7 years, you're good. You're good. You're going to weather the storm, even if the prices do go down a little bit. So anyways, that's where my encouragement is. Get in the market. Buy now, sell now, but don't make decisions out of fear. Okay, don't make decisions out of fear. That would be my recommendation. All right, have a blessed day. If you need anything, you reach out.